So we'll start off with looking at this week's action in the SPX and the S&P 500, which joined, along with other correlated assets, Nasdaq, semiconductors, in a bit of a swoon this week. There was the big swoon, well, last week rather, the big swoon of 11% in the Nasdaq, 5.25% in the SPX. And the issue is this a low? Now, we've rebounded. Lots of people are saying left shoulder here, head here, right shoulder here, and then the crash will resume. There's lots of calls for that, but what would I be anticipating next week, at least at this point, before there's been any further price action? Well, just a plain look at the charts. We've come down into just below the 30 zone. Not an extreme reading of oversold, but, you know, moderately oversold. We've breached this high in momentum, and we've breached, have we? Let's zoom. We've breached this high on a closing basis in price, so price and momentum confirming each other. We're now in this area of wicks, where buying was rejected previously. There's the body of the buying candle up here before the plunge. We may head up here at least. If we look at our internals, if we look at cumulative NIAD, we are on to new highs, which is bullish. Low. RSI actually positively diverged, as did the histogram of momentum on the MACD for this low here and here in price and NIAD. Again, big move to the upside, up to close to the all-time highs, and MACD crossing positively. NEHL, we're back above the zero line on the 2 days, the Thursday and the Friday, I suppose. RINIA, again, the low was made on the 5th. We then diverged positively with this new low, and we're back above our moving average. We're back above 80, and something potentially a double bottom here on the stochastics. Consumer discretionaries against consumer staples, not a super duper healthy move. We've retested the low of the range. It closed below the open, the ratio. That's not great. Money flowed back into stocks from bonds. We're still under the 20. MACD still crossed, histogram is still negative. So these two are our negative indicators, and NIAD, NHL, and RINIA. Positive, XLP, XLY, XLP, somewhat negative, and then SPY, TLT, somewhat negative. And I've marked up some horizontal levels on here. If we look at our other indexes, if we look at the Nasdaq, again, there's a similar look to it. It would take a loss and a close under 29,510 to undermine the continued rally hypothesis. I don't know. I'm not sure on the S&PX. You wouldn't want to see it go below 74.05. I'll put this on. That's a nice little pivot there. You wouldn't want to see that, especially, or a quick recovery if it did. Now, semiconductors. Now, here's the point I was making about price and volume trend last week. The price and volume trend indicator on semiconductors was diverging negatively at the top when almost nothing else was. On any other indice, on Nasdaq, on the S&P, we had this negative divergence here on the price and volume trend of the semiconductors index, which I was using as sort of the leading sector of the leading sector in the tech rally. So I was paying attention to that. We had this plunge, 11%. We've regained almost all of it in the course of a week. But then look what I was saying. The extreme negative reaction in the price volume trend. We went all the way back down to levels not seen since September, when price was back down here. And relative to this low, we made a lower low, but price is much higher. So this could function as a positive reversal. So this is adding to our picture overall of stock market strength. Unless, again, we start losing key levels and it all turns around. The market will do what it wants. However, it does look more like a stock market strength thing to me at the moment. We are under the 14s on RSI, but we're over the 14s on price. Presuming strength is what I'm presuming. There's the Nasdaq. There's not an awful lot more to say about that. If we have a zoom out onto the weekly, there it is. Nothing super remarkable. You can actually see on the weekly we came back and we took the wicks on this little doji and this little hammer here. We've looked at our internals. Commodities were interesting this week. Because I was looking at sort of there about 83.90 as a price floor, and what I was expecting was just like this was a auction under the price floor. Is this going to be a similar type thing? It's an auction under the floor, and we're going to resume some kind of upside. Are we just going to come back down? Maybe hit this trend line, backtest this trend line, all the way back down in the 60s. That would be quite something. This is looking like it could be a lot of distribution. Fuck's sake, go away. There's our midpoint of our range. We're at the lows of a range. What are you supposed to do at the lows of a range? Well, you're supposed to look for longs, aren't you? Especially if there's an auction that is recovered under the price floor. But what are the chances of that? Well, let's have a look on the 4 hour. Let's just delete all my nonsense on this time frame. It's not looking great. There's our price floor. We would have come under here once. We got a rally, a lower high on a weaker rally, a lower high on a weaker rally, and then we've chopped and chopped and chopped and returned to just under the price floor. There's nothing especially showing on our indicators one way or the other. I've lost volume. Volume's supposed to be on here. Oh, there it is. There is lots of volume. Let's go back on the daily. So low volume, actually. Low falling volume throughout this range, disinterest, and then an increase in volume on these down days. An increase in volume on these down days. That's interesting. So it's not looking good for oil. But what about natural gas? Well, natural gas is looking considerably better. We've come into this long-term horizontal pivot. We're inside a channel. This purple here was prior pivot resistance. We closed above it. We've put in negative reversals on RSI, double bottom on composite index, negative reversals on MACD. We've got some indeterminate candles or indeterminate trend color on rock and roll for price breach, moving upwards through MAs, that sort of thing. Supports, you would want to see support coming in here. If it loses this purple level, if the close that was above falters and come back and retest, you wouldn't want it to go farther than the green zone and the green pivot again. 4 hours, again, looks strong. Big positive divergences coming in. Not super low on RSI. Typical reversal area. And a bounce coming out of the origin. The point of origin look of this initial vertical up move here. A few weeks prior. Can we break out of this channel? If we can, we're probably going to new highs. at least on this time frame. Real estate, again, ugly price action, trying to break out and close above the resistance of this channel, so you want to see that follow through and confirm. That's the weekly, so weekly close above resistance, and daily. Financials, this wedge and even the breakout of the wedge were all contained in the momentum zone of pain here, indicating low trend. Even the breakout, but we're coming up now. The thing is, now we've broken out, we've just come up into the typical RSI reversal zone. If there is going to be like continued weakness, and we've come right up into, look, these distribution candles here that led to the down move. So we're in a point where really it's not the best place to buy, I don't think, technically speaking. Silver. Well, let's look at the related charts for that. His crude oil looks abominable in its ratio against the dollar CAD, and in its ratio against oil stocks. We're using ExxonMobil. Inflation, well, rates falling, rates rising against inflation, rates rising, rates falling, rates rising, rates falling, rates raising, and we're still under all our moving averages, but rates could potentially still keep moving up. A little bit of a rebound, but is this just a bit of a rebound, or is it bullish indication? Looks like a rebound at present, and gold is still stronger than silver, indicating overall metals market weakness, and it's not a big speculative rush anymore into silver. IF, speaking of bonds, we zoom out to the weekly. Not quite sure where I've got that line from. There we go. Backtesting this trend line, perhaps, whatever this is. It's a monthly trend line. I'm going to get rid of that because I can't remember where they've come from. You can see it came into this pivot here, weekly pivot. Make that a bit more obvious. Do you go lighter or do you go darker? Let's go greener. Don't go lighter, don't go darker, go greener. So wick, bounce, down candle, up candle. So you don't want to see us lose really the low, pivot low of this down candle. Reseeding back into and retesting this wick area would be bad. Losing this pivot would be more bad. MACD lines under 0, history under 0, RSI under 50, no divergence. Diversion on composite price volume trend, but we've just sort of nuzzled over the 33 line. Nothing terribly strong. Price action indication wise. What are we looking at? Oh yeah, bonds. On the weekly, that is. On the weekly. On the daily, yeah, came into this diagonal resistance here that is capped and contained, and it's a little bit going nowhere at the moment. This was a negative reversal that led to this down move. There could be a bit of inverse head and shoulders going on here. Left shoulder, head, right shoulder. You'd want to see a breakout in momentum as well over that momentum level, which it has not done. But you know, it's yeah. I don't know if you'd want to look on a lower time frame, but I'm not fussed. I think that's it. So in summary, stocks I would be buy biased. Crude is looking very poorly unless we get a close back above 84, so I'd be sell biased. Natural gas looking good, I'd be buy biased. Everything else, meh.